Hello, everyone. Thank you so much for joining us for our Tuesday, October 15th weekly wrap up. My name is Jeremy Cronemeyer. I'm Operations Manager for Wickham Financial Group. And I have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what happened to the markets last week?
Yeah, thank you, Jeremy. Thanks for our listeners jumping again on the call. Yeah, we started out pretty weak in the market. Then all of a sudden, we saw the Chinese market concerns kind of bled into maybe a little bit of ours. And then we rallied really strong into the midweek and finished up the week with the S&P hitting all-time highs twice. So we saw the major indices from the S&P, the Nasdaq, and the Russell 2000, that small cap index, rose about 1%. What sectors outperformed? We saw the leadership again in technology. That really led the gains, followed by financials. That was bolstered by some pretty strong earnings that we had at the very end of the week because we started earnings season again. They're always led by the financials. JP Morgan, Wells Fargo, great earnings. So that kind of led the end of the week rally. Kind of what lagged, we saw utilities lagging a bit. They dropped about 2.5%. Now, keep in mind, we saw some pretty decent or hotter economic numbers. Not crazy hot, but just warmer than what the market was maybe anticipating, which is good for the economy, bad if we think that the Fed's going to be really aggressive on lowering rates. But I don't think any of this has to do with the Fed not lowering rates. So I do want you guys to leave with that. We're not seeing that rear its head here. But we look at consumer credit. We saw that increase about 8.9 billion. That was lower than expected. The yields on the 10 and 30 year, they rose pretty significantly off that latter statement that I just said. If we look at energy, we saw the prices remain pretty stable, even though we still have a lot of Middle East tensions going on. But that was kind of due to some U.S. productions increasing a bit. From a trade deficit standpoint, we did see that narrow about 10.8%. Now, that was the lowest in 5 months. Consumer sentiment, that dropped slightly, while small business sentiment saw some minor increases. So that's good. A little give and take there. Inflation, we dropped to 3 years lows, but core prices remained kind of stubbornly high. Again, we still feel that inflation is going to be really sticky in certain areas, but overall, it's still moderating and whatnot. That's going to give permission for the Fed to continue to be on a moderate and measured rate lowering cycle. Labor markets. We saw the unemployment claims rise a bit, partly due to some hurricane impacts. If we go overseas and look at the Eurozone, we saw some retail sales, investor confidence improving a bit. We did see UK's GDP grew pretty modestly. We saw Germany's gross domestic product forecast revised down again. Again, Germany's still struggling a bit from a manufacturing standpoint. Now let's look into this week. What to expect? Earnings. We're starting that big earnings cycle as we're coming into an election. There'll probably be some drama going on in the market, a little ebb and flow. You always got to expect that. But we saw last week JP Morgan, Wells Fargo really set the tone for the market. This week, some major financials coming out Monday, Tuesday, all so on and so forth. So Bank of America, Citigroup, Goldman Sachs, Morgan Stanley, I think coming out on Wednesday. So we got a lot of financial earnings still to come, and then the rest of the market. And that'll set the tone for the rest of the year going into 25. But economic data, we'll be looking at some major reports coming out from the United States as well as China. Thursday, we'll be looking at retail sales, Philly Fed manufacturing index report, industrial production, some unemployment claim numbers. And then we're going to be looking at the Federal Reserve, maybe in some China statements on next step with interest rates, as well as some potential stimulus that China might bring back to booster and bolster their economy a bit more. Hurricane impact, listen, negative across the board without saying. We saw October economic data kind of in a negative fashion because of that. If we look at some Chinese data, we'll be looking at their GDP, some industrial production, again, setting the tone on how well the stimulus package that's already been rolled into China, how is that affecting the appetite of the consumer over there, so on and so forth. We're looking at European central banks, some of their comments, and then kind of wrapping it up with some UK retail sales and some US housing starts and permits that'll be coming out.
Gotcha. Well, Graham, I had a question for you. So with the election around 3 weeks away here, do you see any drama kind of to ensue between now and then or toward the end of the year?
Well, we always got drama, right?
Yeah.
And I think you have to expect it, right? Volatility probably picks up, but if anyone's looked at our last quarterly webinar that we did, we're not calling them lunch and learns anymore, a webinar, we talked about the three primary things that we get the most questions about. What's the Fed doing? And what effects does that have on the market? What's going on with the election and the effects on the market, over history? And last, but certainly not least, geopolitical events, wars, and so on and so forth, and what effects they have on the market. So I encourage everyone to go back to our website, social media, and go revisit that. I know our clients get it in their email boxes. We're always here to answer any questions on that. And there's no exact science to say, hey, listen, it's going to repeat itself exactly. But you know what? We think history leaves clues. And if you got some foresight here, you can look past a volatile October. You can get past some question marks on who's going to be elected, all that kind of stuff, as long as now we're not a protracted election in terms of people challenging the results. I think the market will flow right into very strong seasonal activities, November to the first of the year, which should continue to bolster the market, even though we'll get some ebb and flow. You always got to expect it.
Got it. Well, Graham, we always appreciate the information. And thank you to our listeners for always checking out the weekly wrap-ups and our webinars. Check out our website, check out our social media pages, and we look forward to seeing you next week.
Take care.